Good to have you with us, Yuka. So the US Federal Reserve, it has just lowered interest rates for the first time this year.
Well, Sharon, the US Central Bank has lowered its benchmark rate by a quarter percentage point to the range of 4 to 4.25% after keeping it unchanged since December. Policymakers flagged slowing economic growth in the first half of this year, coupled with rising unemployment. The Fed has a dual mission of supporting the job market while keeping inflation in check. And up until now, the risks were heavier on the inflation side. All but one of the 12 committee members, 7 board members and 5 regional central bank presidents voted for this decision. One dissenting vote came from Stephen Miran, who wanted a larger cut of 0.5%. Miran, who has been serving as President Donald Trump's economic advisor, became the first sitting White House official to join the Fed's board this week after Republicans in the US Senate fast-tracked his confirmation. The rate decision came as the Federal Reserve was facing unprecedented political pressure from the president, who wanted lower interest rates to spur growth. But the Fed has been cautious as inflation remained relatively high, with the latest reading coming in at 2.9%, significantly higher than its 2% target.
Over the course of this year, we've kept our policy at a restrictive level, and people have different views, but a clearly restrictive level, I would say. And we were able to do that over the course of this year because the labor market was in very solid condition with strong job creation and all those things. I think if you go back to April and now look at the revised job creation numbers for May, June, July, and August, you can I can no longer say that. So what that means is that the risks were clearly tilted toward inflation. I would say they're moving toward equality.
Well, the market had largely priced in a quarter-point cut, with investors more focused on getting hints as to how many more rate cuts would come later this year. Trading on Wall Street got a bit choppy after the announcement and ended the session mixed, with the Dow Jones up 0.5%, the S&P and the Nasdaq in negative territory, Sharon.
In other news, Yuka, semiconductor giant Nvidia stock, it's been hammered on the markets today.
Well, that's the world's most valuable company, and their shares were down 2.6% at the close on Wall Street following reports that China had ordered top tech companies to stop buying its AI chips. First reported by the Financial Times, Beijing's cyberspace authority told companies, including Alibaba and ByteDance, that they must halt new orders and cancel existing orders for Nvidia's RTX Pro 6000D chips that's designed specifically for the Chinese market. In London, accompanying President Donald Trump on his state visit to the UK, CEO Jensen Huang said he was disappointed at the news, but added that the company had larger agendas to work out between China and the United States.
Finally, Yuka, the co-founder of Ben & Jerry's, has quit following a dispute with its parent, Unilever, over social activism.
Well, Jerry Greenfield announced his departure after 47 years at the ice cream company. Since its creation in 1978, Ben & Jerry's has been known to take a stand and speak up on social issues. And when it merged with Unilever a quarter of a century ago, it struck a deal to maintain its independence. But the relationship soured in recent years, with Mr. Greenfield accusing the consumer goods giant of silencing the smaller firm's activism. Luke Traeger has more.
One half of Ben & Jerry's, co-founder Ben Cohen, announced the news on social media that the other half, Jerry Greenfield, was quitting the company.
I can no longer in good conscience and after 47 years remain an employee of Ben & Jerry's. I'm resigning from the company Ben and I started back in 1978. Standing up for the values of justice, equity and our shared humanity has never been more important. And yet Ben & Jerry's has been silenced, sidelined for fear of upsetting those in power.
Political and social activism has long been a part of the Ben & Jerry's identity, from black and LGBTQ+ rights to the war in Gaza and Palestinian refugees, among others. Unilever, one of the world's largest consumer goods conglomerates, acquired Ben & Jerry's in 2000, with the ice cream maker allowed to maintain an independent board and continue its social activism. However, the relations soured 4 years ago when Ben & Jerry's said it would no longer sell ice cream in Israeli settlements or the occupied West Bank. Unilever sold its Israeli business to a local firm that would continue sales under its Hebrew and Arabic name. Last year also saw Ben & Jerry's file a suit against its parent company, accusing it of trying to silence it from speaking out over the Gaza war, and months later of removing its CEO in what it called retaliation for its political activism. Unilever, for its part, has been spinning off its ice cream making companies into a new firm due to begin its own operations in November. Greenfield, for his part, intends to keep up his activism beyond Ben and Jerry's.
And that's it from the business desk.